a lot of times founders lose a lot of time figuring out who the right person is to go and have a conversation and drive that engagement, right? So very clearly, we kind of found that rhythm to say, how do I keep a small bank excited about what we were doing? At the same time, how do I keep the fintech ecosystem going?
And welcome, if you're listening to this on the podcast version. It's my pleasure and Gaurav's pleasure to introduce our special guest, zooming in from Mumbai this morning. Madhu, thank you so much for joining us. Actually, we just got to the afternoon in Dubai, so this afternoon.
Yeah.
Madhu, how are you doing?
Doing well, Ronit. Thanks for having me. Yeah.
Madhu, before we get into your business, and I'm sure particularly Gaurav will do a lot of deep dive probing into M2P, I want to go back to the genesis, the origin. I was looking at your bio this morning to prepare for the session, and I noticed you work with some pretty stellar blue chip organizations. So the bluest of blue chip, and they happen to be blue in color as well. So Citi and Visa. Tell us about your journey? How did you start in the sort of, if you like, the depths of TradFi, global TradFi, the journey to becoming a startup founder and ending up starting up M2P? Walk us through that journey, the personal journey. And at what point did your mother threaten to disown you?
Not as yet, but I guess I spent a bunch of time at Visa, and when you work in an organization like Visa, you kind of get a 360-degree view of what's happening all around the world, not just in a particular market. And we found, and this is like 2012, 13, when fintech was not a buzzword, API and infrastructure, all of the things that we use as throw in here and there did not really exist, right? It was practically the Web 2 sort of in its full glory, right? But the single sort of theme that we found, because I say we because my co-founder and I were colleagues at Visa, was the fact that a bunch of businesses were looking to adopt or embed payments into their businesses to make their customer journeys more efficient and things like that. But the bank's products that were catering to these needs were really not up to the mark, right? And it would typically take a couple of years for any marriage to sort of happen. That's where we felt the need to actually go out and do something. It was part the monotony of your corporate job that pushed us to trying to do something stupid at that point in time. I would say a bit of foolishness and a bit of serendipity as well, right? Things kind of ended up us being at the right place at the right time, right? And a bit of luck. Yeah.
Mm-hmm. So I get the monotony and the desire to try to do something different. Can you delve into the right place at the right time? I think that's often a crucial element of when we look at success stories and you look back on, all the great sort of founders. Why was it the right place at the right time? Why was that particular moment, 2013, 14 in India, the right time, the right place?
Sure. I mean, obviously it was not by design, right? I think we felt that realization, when you look back and connect the dots, you feel that it was at the right time. It was opportune for us to have started. Fundamentally, we found something that was hazy and, as a white space. We just felt the urge to actually go out and solve for it, which is if things had to play in a certain way and there are macros that are pointing in a certain direction, at that point in time, mobility was just taking off. The app ecosystem was just beginning to form shape. Economics around how app-led businesses can, get, assembled was beginning to sort of, find relevance. We just felt that if all of these things are happening, payments and, and financial services in general is the foundation to a lot of these businesses and how they were building out to from what their outlooks were 3 or 5 years down the line, right? And when we looked at what infrastructure layers that were there, they were really not geared for that demand that is likely to sort of come about, right? So we said if anybody's sort of long gone mobile-led, growth, they cannot be, going reverse on, financial services going into mobile, right? So that was a broad, kind of thesis that we started delving into. Obviously, a lot of folks did not understand our business when we went out to raise capital. In the first couple of years, nobody understood our business. Folks who understood it said, this could just be a lifestyle business. It can't have, a few $1 million in revenue. So we kind of.
Which year is this? Which year is this that you're being told it's a lifestyle business?
2015, 16.
2015, 16.
Yeah. Yeah. And then we kind of said, it's okay. We figured ways to keep the lights on. We just kept, chugging along. For 5 years, we remained bootstrapped. And the reason why I said it's right time at the right place is also the fintech action in India was just taking off. And if you just add, the whole mobility wave and what fintech action was, sort of India was going through, and there were certain, interventions, policymakers made, like demonetization happened, which kind of put steroids on the whole payment sort of ecosystem. And then, by virtue of that, you had second order effects that came in where banks started to look at their, infrastructure more closely, right? Because UPI in one stroke actually started, really stressing and testing the bank's capability to run scaled platforms. So therefore, that to us, we were just there to sort of lap up that opportunity that presented itself.
Just walk us through the landmarks again. So you leave the world of sort of big enterprise about when 13, 14.
Yeah, 14.
And your first startup is what exactly? Just walk us through that first startup to M2P beginning to get traction.
Yeah, I think we kind of, I wouldn't say we pivoted out largely, but the outlook kind of changed over time as we understood the business, as we could make meaningful sense of how large it can get. And every founder is going to sort of keep assessing that critically, saying, if I'm spending the next 6 months, what's my short term, what's my long term? And in some ways, initially, when it was an idea and it was still hazy, we just went out doing things that would just put, food on the table, right? Which basically was opportunities that we found relevant when we were on a day job in Visa, which was how do you opportunistically serve some of these, money flow, inefficiencies that existed, while at the same time zooming out and saying, how can this get productized or how can this be more relevant? So our initial cohort of customers were more NBFC or NBFI like, where payment inefficiency existed. So it was more business serving as a technology play, and the fancy world of fintech did not exist, right? So we were saying, you want to deal with a bank. I understand that world. So let me help run everything that the bank would otherwise do for you, for which you're going to sort of pay me, some dollars, right? But that framework was important, right? Because we were juxtaposed in between a bank and a business, where the value that we were adding to the bank was around how do I, get you more balance sheet play, or how do I mobilize more deposit for you without incrementally adding any resource from cost or time, right? So there was a value prop that we could, carve out for a bank. So that was very important. At the same time, the demand side, as we call it, which is all of these distribution cohorts that came to us and asking for these solutions, we said, you don't have to deal with the bank. That was our single value prop, right? Because a lot of times founders lose a lot of time figuring out who the right person is to go and have a conversation and drive that engagement, right? So very clearly, we kind of found that rhythm to say, how do I keep a small bank excited about what we were doing? At the same time, how do I keep the fintech ecosystem going, right? And over time it evolved, and we kind of take a 24-month view of the business, saying from here, where are we going to take this to? Because we need to keep new engines of growth for us to keep paying salaries. Right? So that was the only objective. So every month we'll say, is this month under stress or under duress? And we kind of that orientation allowed us to start thinking about what's the next big thing that's happening or likely to happen. So as soon as demonetization happened, we realized that more and more banks are going to make acceptance mainstream, right? And then we kind of went behind the whole merchant acceptance using QR, which is a big big business today, but the economics are not sorted, right? So nobody makes money and stuff like that, right? But we kind of failed on that, right? We caught wind of an opportunity, but we were really not able to sort of maximize or extract value from that, right? So we kind of stopped that. One of the good things about not having capital is that it sharpens your focus and allows you to trigger stop loss, at the slightest discomfort, right? Otherwise, you're going to just keep resourcing it, throwing people at the problem, putting more marketing dollars and whatnot, and you're just going to create mess, right? So in some ways, that being bootstrapped and being frugal allowed us to actually keep sharpening our pencils in terms of what we should not do, right? So that's really important. Yeah.
Right. So you said 5 years of being bootstrapped, right?
Yeah. Yeah.
So that was interesting because I'm sure we'll come back to like the differences between maybe after 5 months getting your $50 million check from Tiger versus we'll come back to that, particularly in the context of what's happening in funding. But maybe one last question before I hand over to Gaurav, if we delve more into the business of M2P, the tipping point of the environment going from, so you'd built a business which was based on, saying there are payment inefficiencies that you wanted to solve, and there's complexity for the fintech ecosystem that you were basically helping simplify by being the connector, the middleman, and then demonetization, even before that, the growth of the app economy and the internet economy, and all of this is happening in India. So right time, right place. But there are a lot of people who are listening to you going, don't buy it. What was the tipping point? When was it that you started becoming, when was it that you had to start sort of almost pushing away the VCs from, whether it was from Bangalore or from Silicon Valley, and say, no, we don't, when was it like that kind of being ignored, the guy in the corner at the high school dance, to basically being the center of the party, the prom king? And where did that change?
Yeah, I think between 2018 and 19, we did a bunch of things that was, that kind of triggered the whole, and it kind of reached our tipping point, right? In the sense, we started enabling a lot of fintechs which were adjacent to payments, and we kind of, where the founders had to say, if this business has to sort of scale, we'll have to help them scale, right? So that actually helped in hindsight quite a bit, because those founders started loving us and they started referring to other founders, and there in boardroom conversations we became very, very relevant, because if today we just get bored of this and I just shut the system, India fintech can come to a grinding halt, right? So we just felt the need to be the most relevant person in the ecosystem, something like what AWS could do, right? If assuming that AWS just pulls the plug, the whole internet ecosystem can come to a halt, right? So we said we should be in that dominant position and at a certain scale without worrying about what money we would make. How do I get entrenched and get a seat at the table in every fintech action that's happening, is what we set ourselves to do. And we still have a long way to go, right? With somewhat there, halfway covered. But in every market that we go, we kind of figure out what are the ecosystem players, how are they sort of operating, what's the inherent inefficiency that's out there, how do I kind of help them get better, right? We will figure out the monetization part later. That's where capital helped us to do. But fundamentally, we believe that everywhere we go, there is humongous amount of inefficiency in the way business is run. How do you sort of attack that? So that's the problem that we solve. So therefore, we are partner in somebody's growth, right? So if I'm helping you get from point A to B, I'm not saying I don't care whether you get to B or not. All I need is X dollars that you want to pay me. That's a vendor relationship that you're getting into. But we kind of say that we'll help you get to from point A to B. We'll figure it out when we get to B, in terms of how you should sort of incentivize me, right? So that becomes a very symbiotic relationship with, therefore, practically every one of the A-list founders in India, would be on our WhatsApp, the best of emerging investor communities on our, kind of come to us for deal flows now, right? To understand whether they should be investing in a company or not. And then it was magic when we got a bunch of angels in our first round, Kunal, Amrish, and Jiten, kind of endorsed. They were all platform users, and when they sort of wrote a check, it kind of triggered, a lot of, interest from an investor standpoint.
I want to hand over to Gaurav so you can dig into some of the more business specific questions and maybe gently grill you on that front.
Thanks so much, Ronit. Madhu, it's been a really, really interesting, journey. Understanding your journey so far, it's been really, really interesting. I mean, I knew a little bit about the business, but
right.
I didn't know about one. One thing that's funny is you guys used to be called Yap before, right?
That's right. Yeah.
Right?
Yeah.
And that caused some confusion in the beginning, because I think when people were trying to discover you in this region, they were finding Yap Bank as opposed to finding M2P, right?
Yep. So we had that as a name. We had like trademarked it and all that, but as soon as we landed in Dubai, we realized that there's somebody else exactly in the same business. They had barely started. This is 2018, but we said, it doesn't make sense to have two brands in the same name. So we just said a lot of our customers knew us as M2P as well. We just pulled back on the Yap branding. Yeah.
So, it's just moving quickly on from that, because I thought that was just interesting to look at, because discovery and history is very closely aligned. Three things I want to go through, Madhu, with you is, one is about the construction of the business over the timeline you've just described. The second thing I want to talk about is how the adoption of the business across your different customer segments evolved over that timeline.
Yeah.
And the third thing I want to go through is the expansion of your business geographically, vertically, horizontally, right? So starting with construction of your business, when you first started, talk to me about how big your team was when you first started and how big your team is today.
Sure. Yeah. I mean, when we started, we were a handful of, folks in Chennai, and first 4 odd years, we were about 50, 60 odd people. Again, when you're bootstrapped, every dollar that you spend, you're going to be really careful in terms of hiring and how you kind of go about, going about the people sort of side of things.
There's a lot of churn of employees in India as well, right?
Fortunately for us, we haven't had in the last 8 years or so, in all, we would have had like 100 people going out. We are today about 800 odd people.
Wow.
So we've been lucky that way. Most of the folks who from our early days have still stuck around. I have like half a dozen people who have completed like 5 years plus and things like that, right? So we've been lucky. While some parts of the business still face that challenge around retention and all that, but there is definitely a huge challenge in India with respect to retaining people and hiring sort of new folks, right? So I think we started out small, but as we kind of understood more and more of the business, we kept adding sort of people. Over the last couple of years, we've also been acquisitive. We kind of done like 6 or 7 acquisitions. So that came with those teams as well. To sort of going into your second part of the question, we started out solving for payments, and we started out saying our existence is to serve the fintech. But over time, we figured that the definition of that fintech itself kind of expanded, right? So we said anybody using technology and providing a financial services playbook should get called fintech. So therefore, if a bank says, I want to launch, digital only, product or a neobanking variant of my own, we think of that as a fintech opportunity, right? Because there's more tech that is being used to, offer financial services, right? And we kind of look at our, consumer cohorts into 4 different buckets. There's obviously the banks whom we serve in the last few years. There's a fintech ecosystem. There's also a world which is non-bank but regulated, right? Exchange houses in your part of the world, or NBFCs or lending institutions in India, in Indonesia, in Vietnam, which are non-banks, but they are key to an integral part of the entire financial services ecosystem, right? Those businesses are, very strong from brand, physical infrastructure. They are family owned or, large industry, industrial household. They actually often struggle to actually move up the digital sort of bandwagon, right? Not because they don't understand it. It's more organizational DNA. It's more about resourcing, in the right way. So we play a lot of, we do a lot of work in figuring out how do we move up those businesses to actually become digital first, so that they can go out and solve for their customers, right?
But on the adoption side, just to pause you there for one second, right? When you started your company building a services-based API platform, you were catering for much larger organizations than smaller organizations. And when you have an API-based platform business, the same amount of time you spend onboarding or adopting a very large institution, there's very little difference from the time and effort you spend on
Absolutely.
an institution. It's because of resource compliance. So what I want to also understand is, what have you found in the adoption of your technology, right? How has it changed in the way people are consuming your services and APIs and as a platform from large organizations to small organizations? And how easy is it for them to do it today? So tell us more about that adoption.
Sure. Yeah, as I said, these 4 cohorts, right? The fourth one being large tech companies. So, at same brushstroke, we have very small, just born startups to really large, multi-billion-dollar businesses also using the same platform, right? Over time, we learned that resourcing these 4 different cohorts differently is how we can serve them more efficiently, right? Early stage startup is more do-it-yourself. A lot of them are SDK'd out, and there's a bunch of documentation. It's just helping them figure out. Tech is not the challenge. It's more understanding what the business side of it, how banks will sort of take it is how we solve for. In a large tech company, like an Amazon, for example, right? We don't work with them, but I'm just using that as an example. There's no dearth of talent or tech. It's more about, for them, it's a build versus rent decision, right? So can I fast track go to market for them, right? So therefore, the way we resource some of our organizationally is based on what kind of customer we are serving. So there could be heavy implementation when it's a bank. There could be light implementation when it is a fintech, right? So that's how we have kind of gone about doing it.
And also tell me about, now you're doing a lot of expansion, right? So India itself is one of the biggest markets you can possibly service in the region, if not the biggest, right? As a single unit entity with its own complexities, but its own advantages, right? I mean, which help you grow. Now, moving out of that ecosystem into our ecosystem in the region, which is the Middle East and Africa. Very fragmented, operating silos, regulation, and I've seen your movements in that space. I won't go into detail about the understanding of that, because I'd love for you. Your expansion plans of this region, tell us about how your platform, how your company has come into the region, why you came to the region, and then the challenges you faced in your understanding of the region versus what adoption you're seeing today. It would be interesting to understand where you come with such an advanced, cutting edge platform, technology, services for people like the massive cohorts to the entry-level cohorts that you're bringing here to this region. Is it straightforward? Is it plug and play? Has it been massively successful? Can you walk us through that expansion into different regions?
Maybe I can jump in, Gaurav, and ask Madhu to generalize that question, not just about the Middle East, because I think you're in many countries, right? You're almost in a dozen different countries.
Yeah, absolutely.
It's just expansion, really.
Yeah, exactly.
Because India is its own ecosystem, really.
Yeah.
So it's really interesting to learn what your perspective on expansion.
Maybe Madhu, you could just tell us which countries and over what time period you've expanded, like which countries you've gone into, and what kind of drove the decision to expand in the ABC country, and then to the extent that you've had very different challenges. And obviously, Gaurav and I are very familiar with your business here and some of the people who help run that, but we'd love to have that kind of global perspective. And also, you've been engaging in a little bit of Twitter banter on the India versus non-India side. So maybe you can expand on that too.
Sure. I think so. The way we've kind of focused on Asia, in a broader sense. So we have businesses in Southeast Asia. We have customers going all the way up to New Zealand in the east, to Egypt in the west, right? So that's the span of operations that we have today. I think 2 or 3 years ago, when we looked at the business, by then as founders, we had spent more than 5 years. We realized that we have spent the good part of our career sort of building this business. So therefore, if we have to spend the next 5-10 years, should we sort of work towards small outcome or large outcome, right? The answer obviously was a large outcome. And then we said, a lot of stuff that we have built in India, if you actually fundamentally look at how financial services products are, the credit card works exactly the same way, whether it's India, US, Indonesia, or for that matter, Middle East. So most of the products were cookie cutter, right? So you could just port some of these products from one market to the other. There are cultural, sort of regional, as well as regulatory nuances which you need to solve for. So it's more of an 80-90% there as a product. You'll have to localize some bit of it. The rationale was that India is this massive market where you can build any business, and you practically could sort of scale to millions of users. But there's always a question around how can you monetize that and make money, right? So from a value creation story standpoint, we felt that we could build it all up, and from an investor DAUs and MAUs, you can show all the glossy numbers, but you have to really show dollars. You'll have to sort of look at adjacent markets, right? But on a more serious note, we just felt that the world was shrinking. A lot of these product ideas and innovation that were happening actually started taking flight and going to other markets. As an example, we have a ledger product for SMEs called Katha Book. It's one startup that does this. There are 5 of them in Indonesia already, right? So therefore, we felt that some of these ideas and entrepreneurs were not thinking just India. Web3, for example, the best Indian city to do Web3 is Dubai, right? So you'll find practically everyone who is building for India is actually based in Dubai. So there's a bunch of things that are enabling infrastructure led, that is allowing people to sort of move more freely. We have a whole bunch of companies that are building data products sitting in Israel, right? Tel Aviv, right, for example, right? So we felt the need for us to be, going into these markets and just making sure that we are relevant in those markets. But the fintech action is not as vibrant as it is in India, or at least it was in India 2 or 3 years ago, right? And we just said, if you're there, we probably can, sort of, if we were able to demonstrate our ability to build this as an ecosystem play, as markets sort of evolve, if you're there at their heydays, we would probably grow with them as well, right? So that's how we kind of started looking at markets more, figuring out what's the time zone overlap and are we able to service them, But over time, we have realized we have to localize. So therefore, our Egypt operations is fully, a couple of Ahmeds and the Mohammeds there. And our Southeast Asia operations in Indonesia would have folks locally there, right? So we're keeping it as a factory. I often say India is the fintech factory for the world. We'll have distribution warehouses in most local markets.
And just to pick up on that point on building in these, I think, almost dozen countries you're in already, and the earlier comment about how you've done very well on staff retention. Generically, startups have high turnover, and then specific in India, there's huge turnover in the tech and startup industry. Talk us through, to the extent you can share, any secret sauce on retention in India, and also building like the human side, the person, the people side, building teams outside. Sure, it's, you bring maybe some extra product knowledge because India is a few years ahead of some of these neighboring countries, but how do you then kind of build and keep teams together? Do you have like a hit squad of people who worked with you that you send out,
No, I think we one of the things that has worked well is that we are not based in Bangalore. So that is in itself takes away 50% of the complexity around retention and whatnot.
Where are most of your staff?
So we are largely, based in Chennai, which is a city in South. And
we've heard of it.
And then we are so distributed in Bangalore and Bombay. Most of the market-facing folks are in Bombay. So because most of the fintech banking action happens in here. And then sales organizations and in local markets. But we are moving tech to Dubai, for instance, right? So we're giving people the opportunity to just be borderless. If you feel that you want to experience a new market, we've had like a bunch of sales folks who have moved from India to UAE, focusing on Saudi and a bunch of markets out there. It just gives them a bit more exposure to sort of learn. Although we'll have somebody handholding, having that local sort of domain expertise and the market understanding. I don't think there's one particular secret sauce. We've just been good with people. We didn't give ESOPs for the first 5 years. So when we actually got investors, we we did a lot more. So that kind of led to people, generally we do stuff that is more human, right? It's not your HR checklist activity to do. A very simple thing like whenever you're there, go out for the larger team for a meal, or just give them a hearing, sitting besides them on the floor, things that people appreciate actually, right? So a lot of things, stuff that most founders take for granted.
Yeah. No, I mean, maybe when you're next in Dubai or I'm in Mumbai or Chennai, we need to spend more time discussing this, because I think this team building, team retention is just such a major issue. And I can see Gaurav nodding away furiously at his end. Maybe we could just talk a little bit about not so much M2P, but the broader fintech and funding landscape. And again, this is something that you've opined on online. I know that I wake up every day and check your Twitter feed, but you've been making a few interesting comments about, particularly given your background of having been bootstrapped, because many of the folks that have built in fintech in the last 2 or 3 years have been awash with money, particularly at the top of the apex of the pyramid, right? I'm sure there's hundreds of thousands of startups at the lower base of the pyramid who've struggled, but for the lucky enough to the top of the pyramid, money has been thrown at you like a fire hose has been turned on, and that began to be. When did you begin to notice it in the broader ecosystem? Obviously, you guys announced earlier this year, right, in January, that you'd closed a big funding round. When did you start noticing it in the ecosystem that things are tightening? Obviously, the public markets began to roll over in the second half of last year in the US. If I take crypto as some kind of risk traffic light or indicator, all-time highs are in November-ish, right? Before they've collapsed. In many cases,
supposed to be an inflation hedge.
When did you start noticing something is changing in the air?
I guess the bubble was visible for us, right? In the sense, we are fortunate to have like cohort view of businesses, right? Like let's say there's digital lending that's happening. There's a startup that's doing BNPL. The business that got set up in 2018 vis-a-vis a business that got set up in 2020, we found them, accelerating their fundraise by at least 12 to 18 months, right? In the sense, a Series A would have taken them, let's say, 2 years. For a late cohort, was getting that in 6 months, right? That was fairly, concerning, right? But I think the real slowdown started only in Q1 this year, right? So until a lot of the announcements that came out typically were deals that were done in Q4. People came back from their Christmas break, and it was all all hell broke loose, right? I think in 6 weeks' time, it's almost like being in Melbourne, right? So you kind of have more than one weather in the day. Like in a quarter, it from super hot summer to extremely sort of cold winter. I think there a lot of folks, a lot of founders actually were beginning to get uncomfortable with the overall funding noise because there's money thrown in. And also from an ecosystem standpoint for India, many of these founders are first-time founders. They have not handled the mental fatigue that goes into this. And it's not spoken often that you are not ready to take that no, right? Because the money was so, liquidity was, so abundant. Suddenly now, you don't have, even a phone call from a VC saying, how are you guys doing, right? So that's something that is, sort of uncharted territory a lot of founders are in. But I think it's going to be a while before, things come. The pendulum will strike back, money will find new shores. But I think this is, in a grand scheme of things, this is good because it kind of builds resilience to a lot of teams that never existed or never was tested, is how we see it. Yeah, because we are sitting on a pile of cash, we can say all of this. But if you ask someone who's got like 3 months runway, the answer is probably going to be very different.
Yeah. I mean, you've got both a pile of cash and also the experience of bootstrapping for half a dozen years. As we sort of wrap up this conversation, let's talk about, again, back to M2P and you personally, Madhu. What's the end ambition? What's the end goal? When you set off on this journey and you began building your own companies, what was it you were looking for? How much of that have you already achieved? I know there are probably friends and colleagues listening to this or listening to it on the podcast. So hopefully hang on to every word you're about to say now. But, is this like, how far down the road are you done? Are you just starting? Is it day 1, day 0? Or, it's time to sort of go to the Maldives and hang out with Instagram starlets? I don't know.
I guess we started out, like we said, the three of us said, let's give it a couple of years, honest shot or a couple of years. We'll see where it, takes us from there, right? But over time, we realized, and more so in the last couple of years, we realized the value that we were adding beyond the money. I think we have made more money than what we would have, got as retirement, working, until our retirement, right? So it's never the money that's the motivation, like most founders have. The value that we were, sort of bringing to the ecosystem and the number of businesses that we're enabling is what sort of keeps us going. And every day when we wake up, we think about how large some of these businesses have become just because we were there. Nothing to take away from all these founders who built those companies, but just that small part that we had played, helping them sort of get there. And over time, we've also realized that there's a larger opportunity at play with respect to how banking sort of technology, is being is going through a change. We believe that the way tech is being bought by financial services institutions is going through a massive change, almost like how from I call it the cloud moment, because 15 years ago, internet businesses were run where you buy hardware, you assemble a team, and you do all of it all by yourself. Today, you can do that with just one sign up with a credit card on AWS, right? So we believe that a lot of these financial products can, and we could be that platform where it's almost like AWS, where you can just come in, sign up, and it's an a la carte of products that you can sort of take in. AWS today has no borders. We would ideally like to sort of build this business into a borderless sort of world, where increasingly you'll need a bridge to build, sort of bridge the Web 2 and the Web 3 world. Similarly, in financial services, you will need that. We still don't know what form and shape it will take, but we're just right place to be, playing a very active role in that. So therefore, we don't actually, we are enjoying and taking the day as it comes. We don't really have a grand plan, but we would like to at some point take the company public and just make this, outlive us if it may happen. Yeah.
Right. So you have big ambitions. It's borderless. It's global. AWS of finance is a pretty big one, and doesn't sound like you're anywhere close to wanting to sail off into the sunset. And
that's right.
Nothing wrong with hanging out in the Maldives, by the way, with starlets. Nothing wrong with that, but it doesn't sound like anywhere close to that. But listen, I think Gaurav and I would love to chat more, but we have a time limit on these podcasts, and we've gone over the time limit. Maybe we should have a second episode, Gaurav, to get into what we haven't covered. Madhu, thank you so much for joining us. It's been a pleasure to host you today.
Thank you so much, Ronit. Lovely talking to you and Gaurav. Yeah.